Hi, this is Randy Finney with the Right Side of the Chart, and today is Sunday, February 5th, 2012. And this is the second part of the update to some of the trade ideas that are currently either on the site right now under trade ideas. Some of these are actually might have a few new trades here to cover, and I was also going to go over just a quick overview of the shorter term charts, maybe look at one or two daily charts. Again, as I said in the last update, I believe not much has changed as far as the weekly chart goes. We're still holding right around that key resistance level on the S&P, and as I mentioned before, I'm much more focused on the longer term charts right now than I am on the short-term charts. Okay, let's start out with this one here. We're looking at NGPC. This one was posted the other day in the blog. And on this one, we're looking at a potential inverse head and shoulders pattern. I had drawn two necklines here. I believe there's a static chart that you can reference on the site. Each of these necklines I think are equally as valid. Typically there's only one neckline in a pattern. Call these what you want. Call them, resistance lines, support lines. Now, as you can see here, we had a few touches, some reactions off this line. And what I really like about this pattern is the fact we also have this key primary downtrend line coming in as well here. So you can see what happened here. We did have a breakout recently, a couple weeks ago. Prices fell back down, but then they found support on this lower support line, possible neckline. So in this case, we're not looking at the most well-defined, exact entry point on this pattern, but I am seeing prices hold up at this level. And as you can see here in this most recent green candlestick on Friday, we did get a pushback above that key downtrend line. We're still holding above this neckline. So, for anybody looking at this trade, you might want to wait for some follow-up on the upside. Look to see some volume come into the stock if we do see any more upside here. And if you already took the pattern in anticipation of it breaking out, I would probably consider some stops somewhere under this line here, not too far below. Again, that all depends on your entry price and your own trading style and risk tolerance. Okay. Moving on to PNSN, we're looking at a daily chart here. This one was posted a few weeks back here as a long on the break of this trend line. And if memory serves me correct, I had reported that posted that the first target was quickly hit for a nice gain. Just a couple days, day or two after breakout, if I remember going from memory right. Again, this is all on the site. Anytime you want to reference old notes, charts, just go to the search bar in the upper right-hand corner, type in the stock symbol, and hit enter, and that should pull up all the posts and charts on the stock. So we're looking at we hit a target of T1 here. We pulled back, consolidated, had another powerful thrust up and through that resistance area. Prices came in here and then pretty quickly hit the second target. And something to note, typically on my trades, I like to list multiple targets, and one reason I do that is not only to give traders, quick traders can take the profits at the first target. Longer term traders might hold out for additional targets. Personally, I like to trade off these targets. What you'll see more often than not are some reactions off those levels, because typically the horizontal lines here are support or resistance levels that I believe are valid, and we'll probably see a reaction off the stock. That doesn't mean we're not going to punch through here, which we did, or I wouldn't have had T3 up here if I'd never thought prices would get that high. But if you look at it, you had a pretty quick reaction off all these levels. In fact, T1 was hit, and look how much we pulled back here. We punched through, hit T2, pulled back, retraced over 50%. Of the move back to this next support level. This would have been the next support had we pulled all the way back. And now, as you can see, we've punched through this second level after pulling back a little bit, and that's the next likely target. Again, assuming the market holds up into this week. Also note on stocks like this, you look at the prices, and this one broke out around the, I guess, $1.13, $1.14 area, and first target hit was $1.30. So if you put that in percentage moves, it doesn't sound like a whole lot, one few dimes or nickels here or there, but these are pretty good percentage moves on these low price stocks. And again, as I always advise, typically on lower price stocks, low volume stocks, keep your positions small. That's something I plan to talk about coming up, is position sizing, relative risk in all of these positions, and how I like to manage those trades. In a nutshell, I won't put as much money in a trade like this as I would in, say, a stock like IBM or Apple. A larger, much more actively traded company with a higher price. You're typically not going to see these kind of upside or potential downside moves. So, with that being said, PNSN, I believe I took all my profits here recently, posted that, but mentioned that the pattern still looks good from a longer term perspective. So any longer term traders, swing traders, and or investors may want to continue to hold. And if the market holds up and this stock continues to hold up, I may do some updates and show some additional targets. But if you look over here to the left, this volume at price histogram, as you can see, prices are very thin. So there's a good chance this stock can run all the way up to this $3 mark in relatively short order. Again, that all has to do with the market, and I think if you're listening to this video, you've probably heard my multiple caution or warnings, I should say, on being aggressively long in this market or taking new long side breakouts at this point. So just something to be aware of. Okay, this is a daily chart of PSMT, Price Smart, and this was a trade idea I'd posted a few weeks back as a breakdown from this wedge type pattern. If you look at these two upsloping horizontal lines, this one was pretty well defined. You can look at all the touches along there, and we gapped down below it, where it was posted as a short there. I had mentioned covering here at this first target. As you can see, we had a perfect bounce off that level, and I had mentioned shortly after that we might be able to, a trader who had played this down, covered here, might be able to put a short on right here because I noticed some nice horizontal resistance. But as has been the case lately in this very powerful momentum-driven rally that we've had for the last few weeks here, a lot of stocks have just blown right through any technical resistance levels, and that's the case that happened here. So again, depending on what your trading style was, you would have either had a stop not too far above on the other side here, or you may still be holding on. Personally, I never re-entered that short, and if I did, I would probably still be holding on to the stock. That level was about, what is that, 62.36 roughly, and we're at $66 now. Not a huge loss if you're swing trading. If you look at these targets here, if we turn back down like I think this stock might, there's a good chance of it. Notice this thin zone here. It's pretty thin between this first target support level that I have here. If we break that line, I'd say the odds of T2 being hit in relatively short order are pretty good. Just a side note, this is a longer term uptrend line, and depending on where, assuming prices do break this support level, depending on where they come in at, we may hit this uptrend line first. And that's something I usually point out on these charts, and I will try to update the static chart on this, that if this trend line were to be hit first, depending on how conditions look at the time, that might be my next target, T2. But right now they currently come in together, so we could see a quick move down there. And then of course the next target after that would be T3. So again, if you are in this trade short, we pushed right back up, had a perfect retest, I mean to the penny. If you look at these levels, and these were all posted here, before the stock or as the stock broke down. And this is technical analysis, folks. We had a big gap back here, a couple other reactions off it. Prices hit to the penny, had a sharp reaction up, and if you can zoom in, hopefully you're watching this video on high definition. If not, there is a setting on YouTube on the bottom right hand side to change your quality. I would recommend the highest setting, and either a large screen size or possibly a full screen depending on your monitor size. And then you'll notice here this candlestick wick on top just happened to make a perfect kiss of that trend line, and so far prices have moved back. Nothing big yet. Again, we're in a very strong uptrend in the market, so that does not surprise me. But at this point, if you are currently short the stock or are looking to enter, here is a gap right here at the top of my cursor, and that's also the point that we retested. So personally, I think a good stop loss level is just north of this line. And as I say, I like to go a little bit above where I see support, because the market is, and the market makers and the powers that be within the market just love running the stops. They know where most traders are putting them. So if you have a stop right at this line or just a couple pennies above it, well, there's a good chance they're going to make a run for those stops, especially if they see a cluster of stops sitting parked up at that level. The big boys have the money in the machines to just make those prices punch up through there, run all the stops before the stock takes a nice plunge down. Believe me, I've seen it 100 times. So again, at some point in the near future, I will put a video together on position sizing, stops, and really how to do all this stuff. Okay, let's take a look at that. Okay, this is SFI, also a recent trade that I had posted here in this symmetrical triangle. We did get a break out of that. I've tracked this one pretty much all along, and went right up to the first target in pretty short order, which was a pretty sizable move. You know, again, look at if you were in the trade, you are aware, but from 620 up to almost 720, $1 on $6 is a pretty good move. Pulled back. Actually, we had a quick punch through, and then prices quickly reeled back in, consolidated underneath that target area, and then on Friday we did have a nice punch through, pretty impulsive move through. Again, market is very overbought here, but the trend is up and the trend is strong. So if you own this stock and you're holding out for the second target zone I had originally listed, you might consider ratcheting your stops up to somewhere just south of this T1 level, because now broken resistance becomes support. So if you haven't taken any profits yet, just consider that stops there if you are a longer term trader holding out for this next target. Okay, folks, this is VHI, another one posted recently for a long or short setup, depending on whichever way it broke, but I had favored the downside resolution. As I'm going through these charts, just to keep things clean, I usually I do not show my indicators down at the bottom. I'll usually make some mention of what I'm looking at, but for example here, this was an ascending triangle type pattern, and you had multiple attempts, well, a few attempts to break through these highs up here. So you have a triangle, an ascending triangle shape pattern, and now someone with the glass half full looking bullish on the stock would say, well, okay, that looks like a stock bound to break new highs at any time. But you look down here at some of these indicators and you see from this push to this push, which actually was a false breakout. If you really zoom in close, you'll see a wick that had taken out, made a new multi-year high on the stock, and then prices failed. And as so often we see, the day shortly after that failure, where prices went up, typically you have a whole new wave of buyers rush in. It's very bullish when a stock makes new highs, as I talked about before. However, when it cannot sustain those highs, it looks like they cleared the stops on there. A lot of shorts probably had stops above there, longs piled in, and then look at the impulsive selling on that stock, down in just a matter of days from, we'd have to put the cursor up there, $64 all the way down to $51 in just a few days. And that is typical of failed breakouts, and that's why I'm being very cautious at current levels in the broad markets. As I had said before, we have now punched just above those key resistance areas I was watching on the SPX and some other indices, but we're hardly above those. And I still think the potential for a big bull trap, meaning a reversal, a fake breakout, remains elevated at this point in time, and that's just why I personally am not aggressively looking at taking any new longs. Actually took most of my longs off, and at this point I'd rather watch the market climb another 10, 15, 20% without me than have to go home every night at 4 o'clock with a bunch of longs in my account and worrying about a big gap down in the morning that I'm trapped in. So either way, I can put a horizontal line here. There's another possible stop level if you are short this stock at this point. That's around 62, call it 62.20 or so. And this stock has been drifting down, really going against the grain of the broad market lately. I'm sure it would probably be down a lot more if the market wasn't so strong. But either way, if you're short this stock, these are the targets listed below. A nice big thin zone over here to the left. As you can see, not a lot of stock trading in here in the last couple years. So I think if we break this line, this short could pan out pretty well. And that's a pretty nice target from $60 down to nearly $30. You're talking a 50% drop in the stock. So we'll see. It's going to take the market to cooperate with it on that one, and anything's possible. So WG, this is an energy stock, also posted recently in this falling wedge as a long idea. We did get the breakout. This trade's been posted along the way. We had initial breakout, a pullback, and then a push back up to hit T1 within just a couple weeks of the breakout. As is the norm, we consolidated around that level, which shows it was a pretty good resistance area. So you had plenty of time to take profits. And I did want to just point out, although I'm no longer in the position, as I mentioned, or I'm sure I would have mentioned on here, I'd have to look at my notes, this one looks very good longer term. This is, these are some of my favorite patterns. This stock has come down from much higher levels in a bullish falling wedge. Nice positive divergence here, and we made a clean breakout. Moving averages are curling up. So if you're long the stock, consider, I would probably look at stops. If you can see the horizontal line on my crosshairs right now, it's hitting these points here, these points here, and I'll try to update some static charts on these soon, but that is where you might consider a stop. Again, depending on your risk tolerance, your trading style, that might be a little loose for a lot of people. I know we're at 463 right now, or where we closed Friday, 423. That's a considerable drop, but if you're swing trading this for one of these higher targets, and just taking a look at this chart, if the stock market continues to make gains into 2012 and we don't have really a serious pullback or a primary trend change, intermediate term trend change, in 6 months from now we're considerably higher than today, I would put the odds at very, very good that this stock will be up to the fourth target area. Again, it all depends on what the market does here, folks, but you're looking at some pretty good gains even from current levels. So just wanted to point out that T1 has now been cleared, and this is the next logical target, and they're listed along the way. So if you're long the stock, consider raising stops and protecting your profits. Okay, guys, let's take a quick look at the indices here. And as I said, I've spent a lot of time on the index charts recently, and personally, I'm really more focused at this point in time on longer term charts, namely the weekly charts, even the monthly charts. I've been in these type of similar market situations before, and call it what you want, but my instinct is telling me to give it a little time here. Any breakout that we have at this point, even if I were to see some volume come in this week on the move up, due to the overbought levels and many other red flags that we talked about, personally I would be very, very skeptical. I may take longs personally, to hedge in my portfolio, maybe jump in and out quick, but I would not be at a 100% long stance right now, having all my cash deployed on the long side. There's nothing wrong with trading long short. Nothing wrong if you are bullish and not comfortable with shorting stocks. Nothing wrong with being long 20, 30, 50%. Obviously, folks, everyone sees different things. If you want to be 100% long in this market, that is your prerogative. Stops do work in an orderly market, but just be aware that when you have run-ups like this, this current run-up reminds me a lot of the move up, that just the relentless move. And I even remember a video that someone had posted and I watched on an experienced trader, during talking about the Black Monday, the crash in October '87. I was just in high school back at the time. I was a senior in high school, so I wasn't trading stocks at that point in time, and I can't tell you that I was there to witness it, but I remember this trader saying he remembered, and this was just days or weeks before the flash crash. He remembered just the virtually identical market action, and then boom, there it was. I know they try to blame that on an erroneous trade, but I think there were other factors in play. In fact, I had made a post just a couple weeks before. I was not expecting, but wouldn't be surprised for what I called a collapsing of the bids, which is exactly what that was. I didn't use the term flash crash, but and sure enough, that happened, and I was short that day for it. Now, whether this is a repeat or not, that's yet to be seen, but this move has just been unchallenged by the shorts. It's on low volume. There's just a lot of signs that don't make me comfortable, and that's why I'd rather sit out on the long side, keep a few shorts on with some wide stops until the very first pullback. When we get the first pullback here, whether it comes tomorrow morning, whether it takes another week or so, then we'll be able to look at that, how impulsive that pullback is, how far it goes. We'll look at the internals. There's a whole myriad of factors I'll look at the time to decide, okay, is this a pullback to take some quick profits on these shorts, or is it possibly going to be more of a lasting top? So again, we can only determine that when that time comes. Let's take a look at the 60-minute chart. Okay, this QQQ 60-minute chart, I just wanted to point out I know this chart looks busy. These white lines were the original uptrend channel that I was watching and reported. I might have moved these today playing around with them. Yeah, I think they were about right here. And reported a breakdown last week, and then a push back up, a retest, another retest, and now boom, we've shot back within what I thought at the time was a channel. And at this point, I'm actually going to remove these lines. We've had just too much retesting, the shoot back into the channel, and some of you will recall that I did post a new uptrend line here, noticing that this line actually fit better, and that's what I do in technical analysis. I'm not going to sit with any one trend line, one view. I'm always looking for a reason to talk myself out of my current bias, my trade position. I try to really take a look at both sides, and so I did add this line on, and just from a pure charting perspective, it's much more clean. We have a lot of clean tags, 1, 2, 3, 4, 5. That's just a tail that spiked through there and closed back in. We have a perfect candlestick closed body, so 6, 7, and it's sort of wedging. The top is coming down a little bit, and again, this is a very mature and extended uptrend line on a 60-minute chart. So it's not really so much a matter of if it'll break down, but when it'll break down and how far it'll go. So we'll see. Okay, you might also recall a week or two ago, gosh, it's been a little while, on one of my market updates, I spent a lot of time talking about the NDXE, the NASDAQ 100 Equal Weighted Index, and why I'm not as big a fan of the Qs. Now, I trade the Qs much more often. They're very chartable, if you will. very, very liquid. But as far as determining where we are in the big picture, it's one of the least diversified indexes out there. I follow the Russell 2000, which as the name implies are 2,000 stocks. They're small cap companies. The S&P 500, the 500 largest stocks in the U.S. by market capitalization. The Dow, you'll rarely hear me talk about the Dow. The Dow is a very, very unbalanced, or I should say, not a broadly diversified index. There are only 30 stocks in the Dow, so I don't pay much attention to the Dow. The Wilshire 5000, there's another broad index. The problem with the QQQs or the NDX is that it's not equal weighted, and I've spent a lot of time on that a couple weeks ago, so I won't do that now. But as you know, Apple is by far the largest component. I believe nearly double the size of the next largest, and then the top 10 alone are the lion's share, or a big bulk of the NASDAQ 100. So as far as looking at the market overall and what we're doing here, I prefer to use this NDXE, at least at this point in time. And as I pointed out, that trend line, this was the original trend line when I started putting that one up a couple weeks ago. This trend line hasn't broke down, not even a brief tail or spike below. So again, folks, we're in an uptrend until some of these other 60-minute charts, these are the canaries in the coal mine, if you will. Long-term traders and investors, don't be overly concerned with 15, 20, or 15, 30, 60-minute charts, but this gives traders more of a heads up. When these 60-minute trend lines break, then we're watching the dailies, and right now what I'm seeing on the NDXE is a rising wedge, as this upper trend line, just like the QQQ chart we looked at, is slightly downsloping, so we have sort of a wedge here at the top. And what I often refer to as an overshoot. Prices on Friday gapped up and out of the wedge, and again, this is not 100%, and we have to wait till it happens, but from my experience, very often when prices in wedge patterns like this, whether it's a bearish rising wedge or a bullish falling wedge, when they start to approach the apex, typically these patterns break down somewhere 70 to 80% or so of the apex. Apex would be where these two lines would intersect. And when we see these overshoots towards that point, especially when prices are very extended, very often we see a reaction in the opposite direction. You get a lot of short covering here, some more bulls jump in, and then I often see a reaction back into the pattern and then throughout the downside. So in other words, a breakout in the opposite direction. Again, that's yet to be seen. This is a very strong trending market, but just something to watch out for this week. If we shoot back down here impulsively, we see some high volume selling, especially if we come down and quickly break this lower trend line as well. Just something to be on the lookout for. Let's take a quick look at the daily chart. Where we're at, here are the highs back in the May highs, May 11. Here's that downtrend line. Looks like we gapped. Nice gap above it, stayed above it on Friday. But again, folks, I would not be surprised one bit that these aren't just stop clearing moves by the powers that be, the market makers, call them what you want. We've seen this a lot, especially the fact that there's just not the volume that we usually see on such key level breakouts here. Doesn't mean these things have to fail, but at this point, where a trader might normally say that's a buy signal, we've broken resistance, I'm going to give it a little more time for some confirmation. And if we see prices fall back in, I mean, we even have the potential here for an island reversal. Here's one candlestick hanging way up here with a nice gap. So gosh, the game's over, and I jumped right on the computer. I haven't even looked at the futures. I probably should do that. But if we get a gap down, and we might even stay up here for a few days. We could have an island cluster reversal and then gap down below, and that would be a potential topping signal. So let's just see what it would do here, how things go. But I wanted to point out that yes, we are above these downtrend lines, but not by a whole lot. Here's the SPX. Quite a bit on this one. quite a bit more. I will say this has a more bullish look to it, much more bullish, because we broke above. Again, I'm focusing on the downtrend line off the May 11 highs. Broke above it, although it wasn't convincing at the time. We sort of limped through it for a couple days, had a spike above, fell down. Then we had a pretty impulsive move, fell back down below, fell below again, and now have pushed back up. So this could almost be viewed as a breakout and a retest and a move back up. However, now we have this rising wedge type pattern here. Prices again are very extended. We have negative divergence on the indicators, on the MACD, on the volume, a lot of things down here. And taking a look at the weekly chart, we are not nearly enough above that weekly trend line. We have one weekly candlestick close. Let's see what happens. You want to see some follow through there, ideally some volume pickup. Again, I've spent a lot of time on these weekly charts lately. I just want to say that yes, we are above those lines, but sometimes these things aren't black and white, and I'm not using this as an all-out buy signal at this point in time. You can also put a horizontal line here, cut through, and I can see some nice horizontal resistance we're at too. If you discard this one little spike area, there's some nice horizontal resistance. So the market's not out of the woods yet. Finally, a quick look at the currencies. Lately I've been focusing on individual stock patterns, and I've been watching the bigger picture in the stock market, not talking as much about currencies as I usually do, but I wanted to talk a little bit about the FXE here. Okay, let me clean this chart up a little bit. I'm going to remove this line. I have some fibs here. From the top, we had an island reversal top, so we had this gap up, two candlesticks, and then a gap down. Island reversals are pretty solid topping patterns, and as you can see, that was the case here. We're looking at a daily chart here, and if I didn't say it earlier, the FXE is the Euro ETF. And I'm using the ETF here because sometimes I'll chart the euro directly, but the euro itself trades nearly around the clock like most currencies, so you're not going to show gaps, and sometimes I just prefer to use the ETFs because the charts are more similar to the equity charts that we're looking at all the time. So here was an island reversal top, which led to a pretty sizable downtrend, and the lines here I put some fibs up here. We're just shy. This dotted line here, if you go all the way to the left, you'll see that's the 38.2 Fibonacci retracement off the move down from here to here. So I think we can get rid of this now, clean this thing up a little bit. And then we had this downtrend line that I was following and broke out of that, and that's bullish. So there we're nearly at the 38% retracement, and this line that I have drawn here is a pretty decent horizontal level. We have a gap here, nice big gap right here, reaction there, and that's where we're at now. So let's keep an eye on this. I will say that the relationship or the correlation between the currency markets, namely the U.S. dollar and the euro, the two big currencies, hasn't been as tight lately as it has throughout most of the second half of last year and heading into the end of this year. We've seen somewhat of a disconnect, but I think it's much too early or premature to completely dismiss that. I know a lot of pundits are saying that that correlation's over, and as I've posted in the past and pointed out, we've often seen those disconnects, and more often than not, after a few weeks or so, things revert back to the mean or to that correlation. So by that I mean one of two things can happen here. The stock market can correct and come back down, or the euro may continue to play some catch up on the upside. We'll see. But either way, we're at some resistance. I just wanted to point that out, and in the next day or so here I'll probably update some of the other euro and US dollar charts as well. Okay, this has been Randy Finney with Right Side of the Chart. Thank you for listening, and have a safe and prosperous trading week. I'll talk to you soon.